Hello, hello, and thank you for joining us for how to become a successful stock investor. We're talking about making your money, keeping your money, and growing your money, guys. This is Lynn Dimmons of Dimmons Enterprise, and I appreciate you for joining us. You're in the right place if you believe investing has incredible potential to grow your money, but you haven't figured out how yet. You haven't quite figured out the system. You haven't quite figured out the steps you need to get this accomplished, but you want a simple system that you can set in place that generates a steady stream of income. Then you're in the right place. A couple of tips before we get started with the information, with the knowledge, with the wisdom that'll be shared today. Make sure you get in a quiet room and turn off your phone so you can devote your full attention to this training. You work hard every day, and I want you to treat yourself to 60 minutes of focused learning so that you can continue to level up, guys. It's about make your money, keep your money, and grow your money. We haven't been privy to these conversations. We haven't been at the table to have these in many cases. Now is your time. So go ahead and close out any tabs on your computers or other electronic devices if you're using those, or apps on your phone or your laptop. Anything to help you increase your bandwidth, because you don't want to miss one single second of the information that I'm sharing with you. And I trust that you'll get the most out of our time together. And the way that you get most out of the time is to look at this from a big picture perspective. When you work in an organization or corporate America, the one with the big picture usually is the CEO. He has the big vision for the company as far as the direction and where they want to go. So that's where I want you to see yourself today. And I want you to get the big picture of investing so that you can make your money, keep your money, and grow your money. And as soon as we get started, I want you to have the mentality of, I am going to start today. I'm going to start right now, because there are always things that we can do that will allow us to level up and go to that next in our finances. You say, well, who is Lynn Dimmons? Y'all, I'm America's #1 financial rebound coach. Yeah, I said it, America's #1. And I can help you make your money, keep your money, and grow your money through investing. That's if you want to. So apparently you want to, because you've joined in for this conversation today, and I applaud you for that. But it's also very important that you take the next step. And I also want to share, don't shoot the messenger, but if you're born poor, it's not your mistake. It's not your fault. So release that today. Get rid of that today. But if you die poor, it's your mistake. And that's from Mr. Bill Gates. Net worth of $92.5 billion, maybe more than that by now. But I think he knows a little bit about the subject, so I thought I'd share that with you. And before we go any further, I do want to put a disclaimer out here. Dimmons Enterprise, we're providing this training. These are educational opportunities that you're now participating in. This is not legal, accounting, or financial advisory services that you're receiving. We're not soliciting or recommending any particular stocks to buy or sell, or options, or any other financial instruments, okay? This is for your education. This is knowledge and wisdom that we're transferring to you. And the #1 thing that I want to make sure that you walk away is any decision that you make in regards to your investing, that you do your due diligence, you do the research, and also engage professional assistance as you move throughout this process. Now, with that said, the #1 thing is that education is key. Education is key. And we've all heard the Chinese proverb, give a man a fish and you feed him for a day, but teach a man to fish and you feed him for a lifetime. So tonight, this is what we're doing. This is the reason that we're here for this webinar. Well, tonight, today, midday, wherever you are, this is what we're doing. We're teaching you to fish today. So in return for me teaching you how to fish, there are a couple of things that I would like for you to keep in mind. keep an open mind first and foremost. There's going to be some new information, some new knowledge, new wisdom that's coming at you. Make sure you have an open mind in regards to this because it opens up the possibilities. Your mindset must be right in order to receive and to go and grow to your next level. I also ask in return that you treat me and others with respect. Respect other people's opinions or their notes or information that they share tonight. Just make sure that you're respectful of others, and we'll do the same for you. And guys, most importantly, take plenty of notes so you can begin to implement immediately. There's no need of taking this time to simply hear it. Because things we hear only, we're less likely to do. When we see it, it raises it up a little bit more. But when we take action, it dramatically improves the probability of success. So make sure that you take plenty of good notes tonight so you can begin to move to your next. Because Warren Buffett said it best. The best investment you can make is an investment in yourself. And you've invested in yourself by showing up, by being here, by tuning in, by taking notes, by taking action, right? That's how you invest in yourself so that you can now move to your next level. So make sure that you're engaged throughout this, thinking in your mind, reflecting in your mind's eye, going through and saying, hey, what is it that I can do next? Because I'm about to drop some nugget bombs on you tonight, some things that have not been shared with you that more than likely should have, however, they have not been shared with you. And ultimately, this is not about me, guys. It's about you and your situation. Because I know I've analyzed, I've looked at my situation, and I continue to look at my situation to see where it is that I want to go, how I want to grow. But I also implore you that this is a tremendous opportunity for you as well to look at where you want to go and how you want to grow. So looking at your current situation. And many of you are familiar with Robert Kiyosaki's teaching. He talks about looking at a financial statements. And there are 4 key buckets that you need to be familiar with on your financial statement. Your income and your expenses, your assets and your liabilities. And this is going to be very important. And we'll continue to revisit this throughout the conversation. But I wanted to share some information with you. There is an economic release from the Bureau of Statistics. And they actually share some information in regards to the consumer expenditures, okay? And those consumer expenditures are basically what's going to share with us the amount of income that's coming in and as well as the amount of income that's going out, if you will. So this economic release, I want to share with you the actual document so that I can pull that over and give you the information from this economic release. So in this economic release, I am going to this website. And on this website, give me one second. Okay, on this website, you will see, if I can get there, the economic release, bls.gov/news.release season HTML. So if I can get over there to that website, I want to share with you some information. And in this actual release, it was actually released on September 11th with an update on September 13th this year, 2018. So this is a fairly new consumer expenditures annual news release. All right, and in this release, what they share is that the average income before taxes for Americans in 2017 was $73,573. That's actually a decrease over last year, Okay, last year was $74,664. But on the opposite side of that coin, the average annual expenditures increased by 4.8%. It increased to over $60,000 a year. And keep in mind, these are pre-tax numbers that are being shared here. These are your pre-tax numbers, okay? So in looking at this, we now see that if we took that $73,000 and divided it by 12, the income is roughly $6,131. And I took that number 60,000 divided by 12. So the monthly expenses is roughly $5,000. So if this is the case, if we're just using these raw numbers, that leaves you with approximately $1,000 in the assets column. We could fill that in right here, approximately $1,131 that's left to invest, okay? That's the typical scenario. So what I want you to think about is how much do you need per year in retirement to live the way you want, right? How much do you need? Do you need your current income? Most say take your current income, multiply that times 20 or 22 so that you can have that information available to you. So how much do you need per year in retirement? How much do you have saved? So these are all questions you need to ask yourself. And if you want to improve, you start where you are, yes or yes, right? If you want to improve, you start where you are. You can't start anywhere else. You can't go ahead and start at the end, and you can't go back and start from the beginning. So I hope, hopefully your response is yes. If you want to improve, you start where you are. The challenge here, guys, is that most people spend more time on their Christmas list than planning for their future. Now, I just want you to think about that for a second. And as you get these questions written down, I'm going to take a moment, but just to reiterate that most people spend more time on their Christmas list than planning for their future. And I know for me and my little one, that's something that he takes joy in. He has his little notebook or his little journal, if you will, and he's keeping a tally of the things that he wants. He'll take a picture of it. He writes the price down so that I'll have it. See, he's actually spending time doing that. Do you take that amount of time, right? And now plan for your future. And most people don't. But the tragedy lies here, guys. I wanted to share some information with you in regards to where has your money gone. We're looking at how many of you would be interested in this conversation, right? Where has your money gone? And this is a report actually from Vanguard. Vanguard has actually shared that what we currently know for Americans, their retirement plans in excess of $7.5 trillion. However, Vanguard has in their toolbox, if you will, $1.2 trillion in DC assets under management, and that's since March of this year, March of 2018. So they have $1.2 trillion in assets that they're managing. And as a result of managing those funds, their income is coming from, you guessed it, the fees. There are fees that they are now charging on those retirement plans where that money goes back to that institution, whomever that institutional investor group is, whether it's Vanguard, Fidelity, whomever. So it's very important for us to have this conversation today because there are some things that are happening inside of our retirement accounts that are completely different, right? It's completely different. And we always have to ask the question, and I always get this question, well, how much money am I going to make investing, Lynn? But you never ask the question of Wall Street. You never ask that question of your job in HR when they're actually telling you to sign on a dotted line and sign up for these retirements account. You simply sign off, check off some boxes, and then you move on, right? It would be good if I could tell you exactly how much you are going to make, but unfortunately, I cannot. But I also want to share some more information with you when it comes to these retirement accounts. So what you see on the screen in front of you, and you can go and look this up as well. Vanguard has these defined contribution plans details that have been released in their reports. And I have a link to this report that I can share with you so you can go back and actually look at it. Frontline actually completed a documentary of sorts, if you will, on this topic. Can you afford to retire? And they've talked about this issue here from these retirement accounts. And there's also some interesting takes from John Vogel, who's actually the founder of Vanguard. But what I want you to take a moment to look at really quickly with me is these account balances. And I want to just to really quickly, this shows all the participants. You have a column for the average contributions in the plan and the median. And we're going to look at the median. Remember, the median is simply the middle number, okay? The middle number of all the numbers represented in that particular set. And for someone who's aged 55 to 64, we see right here the median savings in their retirement account is $71,105. And the question I ask you is, how long can you live off of $71,105 in retirement? And even if you live a modest lifestyle, let's just say you only want $30,000 to live off of, okay? To live on, $30,000. With $71,000, you will be in retirement only for 2.3 years, and you will have to go back to work or completely live in poverty. So do you think that this represents the dream retirement that you would like to have? However, this is what's being realized by many Americans because this is the average. And one of the things that I'm challenged in, and I want you to pay a particular attention to this. Yeah, I know this is very interesting information. Thank you for commenting. And I see your comments. Yeah, you didn't have a clue that this is what was happening. But guys, it gets even scarier. Let me just share this with you. John C. Bogle, like I mentioned, he's the founder of Vanguard, okay? And Vanguard, as I mentioned earlier, 1.2 trillion. They're the world's largest mutual fund firm. He helped to found them. But Bogle said in his interview here that the retirement system is faltering. And he criticizes the mutual fund industry for emphasizing salesmanship over stewardship. Salesmanship over stewardship. They're selling you, they're pushing you into these 401k plans, but they're not telling you the best use of how to utilize your funds. And he also goes on to warn that the hidden cost and the fees consume a huge portion of the investor's return. So you might say, well, Leah, how huge is the consumption? So we're going to look at the average, right? So if you do your average, what percent of my net growth is going to fees in my 401k plan? That's the question we're looking at. Wall Street, any of the assets under management, whether we're looking at, Fidelity, T. Rowe Price, Vanguard, whomever, 2.5% under management. That's the part that they're taking. So your $1,000, hypothetically, let's say your $1,000 that you put in, you save that for retirement for 40 years. Your $1,000 grew to $140,000. Guess how much of that you get? You actually, if you look down here, you see your assets out of that $140,000 is only $30,000. Why? Because the other $110,000 were actually the fees, right? That was the income to that company for managing your money. So that $110,000 now becomes assets under Wall Street, if you will, whereas you realize $30,000. Now, who's interested in that conversation? And don't think about the fact that what if the market falls at the wrong time? The market falls, if you go back to 2008, the market fell at the time where someone that you may know was retiring and they lost a huge chunk of their retirement savings. So what happens then? Who becomes on the other side of that coin? Who becomes the loser in that situation? And this is a very interesting conversation we're having at this time, because there are also champions out there of the 401k that lament the revolution they started, meaning that they hate the fact, well, maybe hate's a strong word, but they don't like the fact that this is the way that things are going. This was not the intent. This was not the way they meant for this to be. But now that it's happened this way, they recognize the fact that there are some problems in this. And you can go on and read the story, but Herbert Whitehouse, Ted Benna, who's actually the father of the 401k, you know, they regret this because the money managers are eating at your savings. They're eating at your savings. And things have to change. Something has to go down. Things have to come to a close at some point. So this is why it's very important that you do not spend money for no value. And oftentimes that's what you're doing if you're starting to invest or plan for your retirement and you don't know these fees and commissions and you don't know all of these ins and outs. And we hear about dollar cost averaging so that you can recover. But if there's a big drop in the market and you're getting ready to retire, the problem is that you won't have time to allow that to reverse. And then what happens if you are retired when the market drops, then you'd have to sell off more shares for less money. And you don't have the time to recover, so you don't have the time to recoup those funds that are coming to you. So the best way to study is to go back and study people who have survived during the crashes, those people who have done what? Make their money, keep their money, and grow their money. There's also another report out there or another article. I want you to go Google and look it up. It's when a broker leaves you broke. I'm going to share that with you later, but you can go ahead and Google that so you'll have it on your screen. So where's the market today? The market is at all-time highs. And if you go back and study what's happening in the stock market, guys, we always know what goes up, right? Yep, you said it, must come down. So we know that things are going to happen inside of the market, but the beauty here is that you can now position yourself to be successful. You can now position yourself so that you can make your money, keep your money, and grow your money inside of the market with these simple steps. Yeah, there are 4 simple steps that I'll be teaching you tonight. Develop the skill that's going to help you for years to come. There's an old saying, guys, when the student's ready, the teacher appears. Are you that ready, student? Because I'm the teacher. I'm ready. I'm here. How many of you would love a class in your life that would teach you how to ensure that you protect your investments, that you minimize the risk that's involved? Yes, it's risky. There's always risk involved. But how do you minimize that risk? So during this masterclass, you'll learn my 4-step system that's going to help you make those investing decisions to help you protect your portfolio. You're going to learn how to identify wonderful businesses or stocks when they're on sale, how to determine the money-making potential of that business or stock. Also, you need to teach how to teach your child or your grandchildren to do the same. And then how do you turn these skills into a profitable course that you can use to teach others? So you take what you've learned, you do it, and then you go out and teach others how to do that. So all of these things will be addressed in this class, guys. When the student is ready, the teacher appears. All right. This is the exact reason that I've created this investing blueprint. It's fun, it's simple, it gives you the charts, it's real. So it will bless you and bless other people that are in your lives, guys. How many of you appreciate the information that's been shared thus far? Because these are things that haven't been told to us or shared with us, which your financial advisors and others, professionals should be telling you this if you're investing, but in many cases, they haven't even mentioned, haven't parted their lips, right, of this information. These are real numbers that I've given to you. This is not made up, okay? This is the reality and truth of the matter. So we'll move on next, guys. And for those of you who take action tonight, I'll also give you webinar templates as well as access to Financial Confidence Now Academy for 1 year. So these are bonuses in addition to the investing blueprint that I'll be offering you tonight. But we want to go ahead and get started and sharing with you what are those 4 steps. You say, hey, Lynn, you haven't given me the 4 steps yet. But what I want you to know is most important, guys, I'm no longer living on one income, right? Yes, I work and my husband works, but we no longer have to be concerned about the fact, okay, well, this one lost the job, so now what? Because we now have this opportunity, we have this skill in our back pocket of investing that helps us to generate income to support the family and our lifestyle without hustling for sales 24/7. It allows us the freedom that we need to do the things I want to do, and it gives me time, flexibility, and money. See, guys, that's it. Make your money, keep your money, and grow your money. So what are the reasons to invest and teach others? You develop real world skills. How many classes did you take, whether it was in high school or college, that gave you real world skills that were going to help you and your family for generations to come? There were a few and far between, but many, dare I say, none of them gave you the investing blueprint. So what's stopping you? What's stopping you from investing? And oftentimes I hear there is risk involved in investing, right? No need to worry. My job number 1 is to help you manage risk and reduce risk to make money. I'll teach you the skill that allows you to be able to do that. To do what? To manage risk and reduce risk to make money. Does that mean you will never lose money in investing? No, it does not. I've lost money. The best gurus out there have lost money, but the beauty of it is you win more than you lose. So you manage your risk and you reduce risk to make money. The other thing that could be stopping you, the other barrier that we're going to overcome tonight, is you feel that you don't have enough time to do this investing thing. And I hear you, but you trade time today to create more freedom for tomorrow. I love that. I love it so much, I'm going to repeat it. I see you love it too, right? Trade time today to create more freedom tomorrow. This 4-system step that I'm going to share with you, this 4-step system, it allows you to master the art of identifying those wonderful businesses in 20 minutes or less. Who does not have 20 minutes to master the skill? Once it's mastered, you take 20 minutes a month and you take care of the situation, or 20 minutes a week, or 20 minutes a day. It's up to you. You decide. And then the next one you say there's too much competition for stocks. Well, why are you complaining about there being too much competition? Competition is a sign of market demand. This can be used to your advantage. It helps you to determine the best time to get in and stay out of an investment. And you say, I don't know where to begin. Well, I'm glad you're here tonight. I'm glad you decided to invest in yourself today. See, that's where when you find the intersection of your passions, your skills, and market demand, What are you genuinely interested in and committed to? That's where you begin. I'm going to help you figure all of that out tonight so that you can go through this process and begin to invest with confidence. But the number one thing here, guys, is you need to account for every single dollar that you earn. Okay? Account for every dollar that you earn so that you can invest with confidence, because there's no reason for us to be stressed, overwhelmed, and confused when it comes to our money situations. And I don't want you to be in a situation where you have gotten caught up because you did not account for every single dollar, and now you feel you need to go over to your investment account and pull that money out so you can just live. So make sure that you have that solid financial foundation from the jump, from the very beginning, so that you can do this and improve and continue to improve over as time moves on. And in the words of Tony Robbins, if you want to be successful, find someone who has achieved the results you want and copy what they do, and you'll achieve the same results. And I'm so glad that Tony shared that, because that's what I've done for you. That's what I've done for you in this opportunity. But the number one thing that you must remember is you have to go against the crowd. You have to be fearful when others are greedy, and greedy when others are fearful. Warren Buffett said it best. Go against the crowd when it comes to this investing game. If once you can figure that part out, half the battle is done. Now it's time to get to the rest of the battle. So what are the skills? What is the system you're talking about, Lynn? This system is called the UCLA method of identifying stock. The UCLA method, and I'm going to go through each one of these, but the U, of course, is understand. The C is compete. L is leadership, and A is analysis. The UCLA method of identifying stocks is what's going to put you head and shoulders above others. There are others you are head and shoulders above others who do not have this knowledge, where you can go in and now invest with confidence, minimize your risk, and keep, and grow your money. That is the ultimate goal, because you want to be able to do those things that you want to do. Whether you want to be able to help the homeless, or you want to be able to help victims of domestic violence, or you want to be able to spend more time with your family, or you want to be able to go back to school, or you want to be able to travel internationally, whatever it is that you want to be able to do. UCLA method can help you to make your money, keep your money, and grow your money. So take the next step to change your future. Fix your finances in your life, in your business, in every area, and get to your next. So understand. In understanding, this is one of the first steps. Once you've identified those companies that you're interested in, why do you think this company is good for the world? What is it that this company has done that's good for the world? For example, I have here Amazon is a company that we've seen that's taking over the world. We understand different things about Amazon. Amazon started out as a little small book selling company. And now they've amassed so much that they're in so many different arenas. They're like the Walmart, right? They're the Walmart of online deliveries now. So why you think this company is good for the world? That's the understand. The C is compete. What makes this company difficult to compete with? Is it their brand, their price, their secrets? What do they have, right? The secret sauce. Are they like Nike, that logo, just do it, right? They're very competitive out there in the marketplace. You know, there are others that are not going to overstep, because they've positioned themselves well. The L is the leadership. Who is the CEO? Is he new to the company? Is he the founder? Is he an old timer or a long timer, if you will, right? Does he have a bag? What's in your bag? It's a big, audacious goal. And if he does have it, what is it? Example of leadership here. Everyone or almost everyone knows the name Mark Zuckerberg and his association with Facebook and Instagram, right? And the equity that he has within those companies. And what is the foresight? What is the leadership? What is he looking at? Where does he want to take the business? And then finally, an analysis. And in your analysis, you have to look at the true price versus the value of that company. See, price is what you pay, value is what you get. Think about it for gas prices. The value that you get from the gas doesn't change. You get the same miles per gallon, whether you pay $3 for that gas or $5 for that gas. The price changes. The price is what you pay. The value is what you get. So you have to be able to determine that for those stocks. And looking at those wonderful businesses that you're investing in. Once you identify the value, you know that the price fluctuates. So you have to be diligent to determine what is the event that's going to put this stock on sale. And once you identify that event, or the next step is, if it is not on sale, does the market have it priced wrong, or is it selling at sticker price, right? And then will this event be resolved successfully within 3 years? Why or why not? Understanding what are the implications of this event on this. Will I be able to realize my money, right, from this opportunity, and the reasons for or against you making a decision. So now it's your turn. So what is investment? Investment is you using your money or capital in order to gain profitable returns. So what's the investment for you today? In this course, the investing blueprint, your investment is only $97. Yep, you heard me. $97. This course is valued at over $397. Okay, the investing blueprint is where I've taken the opportunity. This is world-class information that gives you the real info on what you need to do to start investing with confidence. It gives you the information that you'll use to look at the strength of that company. And basically what we're following here, guys, is Warren Buffett's philosophy of investing. We're following Warren Buffett's philosophy of investing because it's a proven system. Remember, for those fast action takers, there's a webinar templates that will be given to you, as well as access to Financial Confidence Now Academy. You say, well, Lynn, why do I want those, guys? Because I'm thinking about your future. After you get the skill developed, you wouldn't want to keep it to yourself. After you've developed this, you want to be able to teach your family and friends and your community, right? Get the information out. So I'm giving you the templates so that you can do that. Also, access the Financial Confidence Now Academy, because if you don't track every dollar, if you don't have that under control, that's where you need to start. That's your boot camp. That's your starting place, because you need to get that under control so that you can invest for your future. Remember earlier, I said it, guys, most people spend more time preparing their Christmas list than they do thinking about their futures. And Financial Confidence Now Academy, guys, is a $199 value that I'm giving to you for a year, because you're taking this opportunity. You're taking the next step to change your future. Guys, we must fix our finances, whether it's in your life or in your business or both. Build a solid foundation so that you can invest with confidence. And I see some of you out there, you're not moving. You said, all right, you're wondering, is it worth it? Is it really worth it for $97 for me? Well, guys, think about it this way. The average family's cable bill is $123. That's $123 every month that you're paying to spend on watching TV that oftentimes you don't even get to watch. But you're paying that bill religiously because you want cable in your home. Keep it moving to the cell phone bill. Your average cell phone bill is $148. Yet the cost of this course that's going to continue to pay you once you develop the skill is going to continue to help you make your money, keep your money, and grow your money is $97. Tell me if that's not worth it. All right, guys, I hope to see you inside of the course. The course starts the first Thursday in next month at 8:30 p.m. If you're going to join us live, you'll also have access to the recordings. You'll have 3 weeks of courses where you'll be able to come in, do the work, and be able to join in on the Q&A sessions. Guys, thank you so much. I'm Lynn Dimmons, America's #1 financial rebound coach. Yes, I said it. And when people ask you, who is Lynn Dimmons? You will say, she can help you make your money, keep your money, and grow your money if you want to. Guys, thank you so much for joining. And if you have any questions that I have not answered, now is the time to share.